Welcome, Catalent. We are so excited to meet with you. Welcome, welcome. It's Thursday. We normally do webinars on a Wednesday, so I'm a little bit thrown off, but nonetheless, very excited to meet with this group. Um, would love to get some chatter going in the chat. I'd love to know how long you've been consulting and maybe your industry. What do you do? Anong, happy Wednesday. Michael's just getting started right on. Well, you came to a great session, 30 years in tech, a lot of different perspectives, and I will say there are no bad questions here. So hopefully we can give you some great context on tax structure, a little bit more about collective, and if we can help support you in your consulting journey. But we serve contractors, consultants who've been doing it for 30 years, like Jot, and people who are just getting started, like Michael. So I'm very excited. Volker, 3 years, independent consultant, IT strategy and architecture. Some fractionals, very cool. Formally launched my firm in 2025. Cleo, congratulations. Well, the format of this session, we've got a couple quick slides. We're going to talk about tax structures. And, when you're self-employed working for yourself, there's a couple different ways you can be taxed. And we can explore which version of this might be best suited for your situation. And then we're going to open it up to Q&A at the end. So again, no bad questions here. Feel free to put commentary in the chat. But if you do have questions, I'd like to invite you to use the Q&A box within Zoom, just to make sure we don't miss anything. Well, welcome. So excited to be here with you all. We've got a good group of 45 people. So let's dive in. LLC versus S Corp. So which one is best for you? We're going to talk about the high level differences, LLC versus S Corp basics, when either makes sense, some big differences that may matter, and then we'll open it up to Q&A. So as you get questions on a slide, please dump them in Q&A, and we will make sure we address them. Also on the screen, I'll just call out if at any point you feel like this is something you want to explore more with Collective, there is a QR code on the screen. You can scan it throughout the session. It's going to take you to the Catalent landing page with the Catalent promo code. It'll prompt you to schedule a call with one of our advisors. So just know that's up throughout the session if you need it. So real quick, who is Collective? Many of you might have seen our ads. We've partnered with Catalent in the past. Collective is an all-in-one solution made specifically for self-employed people. And we've actually just expanded who we can serve. It used to be isolated to people who want to elect S Corp status. We now have a tier that can support folks who want to stay at that single member LLC profile. So we do LLC formation, we can do the S Corp election paperwork, and then we handle all the back office work that's required to maintain that tax status. So it's monthly bookkeeping, there's embedded invoicing in the platform, we help file your business taxes. And then for S Corp owners, we run the payroll for you. So it's an all-in-one solution, one app, one fee to make being self-employed easier on the financial side. I'll just leave this up for a quick minute. This webinar is for educational purposes only. Nothing contained in this or any related should be viewed as legal or tax advice. And we are going to dive in. Some LinkedIn Connect. Feel free to find me on LinkedIn as well. I would love to connect with y'all and know what's going on in the self-employed community. Okay, so single member LLCs versus S Corp basics. So many of you may have an LLC and your tax treatment may be different. So this session is going to explore what each of those means from a legal perspective and then a tax perspective. Real quick on the left, single member LLC. An LLC is the legal structure that you form at the state level. So if you live in California, like I do, you go to the California Secretary of State website and form an LLC. The LLC is what gives you a legal business name. This is what's tied to your EIN, your tax ID for the entity. They're relatively easy to set up. The costs vary by state depending on where you're forming. And when you operate as a single member LLC and do nothing else, your tax reporting is relatively simple. So your business activity gets lumped into your personal tax return. Maybe you're familiar with the Schedule C. It's essentially a profit and loss statement that you include in your personal filing. So there's no separate standalone tax return at the federal level when you operate as a single member LLC. Under this structure, your profits, so after all your deductions, are subject to both self-employment tax and income tax in entirety. The way you pay yourself is different from if you're operating under an S Corp election. With a single member LLC, you just take money out of that business bank account, and that's considered your compensation. In the tax and accounting world, we call that an owner distribution or an owner draw, where you're just taking money out of the business for personal use. So here on the left, under this single member LLC profile, relatively simple and easy to set up. The tax reporting is still simple. It does not trigger a separate federal tax return. The way you pay yourself is simple. You don't need to set up a formal payroll. You just take money out of the business via owner distributions. Separately, here on the right, you've got a single member LLC. So that is the legal structure that remains underneath. It does need to exist first. And then it added the S Corp election. So the S Corp election is kind of like a two-step process. You start with the legal structure. For collective members, it's generally a single member LLC. And then you add this tax status with the IRS. What happens once you make that election? One, it gives you an opportunity to potentially control your self-employment tax burden. So that's the big advantage. The downside is once you make that election and it's accepted by the IRS, it triggers a lot more administrative work, and with that, additional costs. And so that's kind of what collective bundles together. So it's a tax election made with the IRS. Your legal structure still exists underneath. You have increased administrative costs and filing requirements. So this S Corp election does trigger a separate business tax return. And that business tax return relies on some additional data that you don't necessarily need to maintain if you're in the alternate structure, the single member LLC. So you've got a business tax return now. It relies on more comprehensive financial statements. So rather than just reporting a profit and loss, you now need a balance sheet. So this increases the need for more robust accounting to generate these financial statements. The next big thing that changes from an administrative and a cost perspective is a need for true payroll. Once you make the S Corp election, you as the business owner have to take what's called a reasonable salary. And then this salary is kind of the vessel for how the tax savings work. When you're a single member LLC here on the left, you pay self-employment tax on the entire profit. When you're an S Corp owner, you pay self-employment tax only on this designated wage. And this process runs through formal payroll, so you need to register as an employer in your state. We partner with a company called Gusto that facilitates the registration. There's payroll tax returns that are due every quarter. So the payroll component of being an S Corp is probably the biggest new administrative lift. So overall, the single member LLC, this is your legal structure. It's what gives you the tax ID, the legal business name, and a layer of liability protection. And then if you choose to elect S Corp status, that election is just layered on top. I do see some comments here, some great questions coming through the chat. If you haven't already, please move them to the Q&A just so we don't miss them. So real quick, we'll talk through this slide pretty quickly, but there's two main types of taxes that us as self-employed people may pay. First one is the unavoidable, unfortunate truth. There is income tax if you earn income in the United States. Income tax varies on your filing status. So if you're single head of household, married filing jointly, that will determine your tax brackets based on where your income lands. So generally, income tax at the federal level is going to be between 0 and 37%. And then your state may also have their own state level income tax. Separately, self-employed individuals are going to pay self-employment tax. So it's made up of Social Security and Medicare for a combined 15%. And that's separately assessed on your business profit. So if you're self-employed, you've done your taxes for a number of years, you've probably seen this PTSD tax bill with all these layers of tax assessed on the entirety of your income. So just a quick example of either tax profile. Neither one is wrong. It's highly circumstantial what the savings potential is, depending on the other things you've got going on, other income sources. But let's take a look at somebody who's made 160,000 of business profit. So profit is the amount left over after your deductions. Revenue or gross revenue is what you bill your clients. Then you've got deductions, write-offs, expenses, and what's left over is your profit. This is what you're ultimately taxed on. So this is where we want to start. Here on the left, we've got someone who's structured as a sole proprietor or a single member LLC. And we've grouped these together because they're reported for taxes in the same way on the Schedule C. Here on the left, this business owner made 160,000 of profit. And since they're reporting on Schedule C, this entire profit is subject to the 15% self-employment tax. So almost 25,000 in self-employment tax alone. This doesn't even factor in the federal and state income tax piece. Here on the right, the same person made the S Corp election and then paid themselves a salary. They landed on 60,000, just an example. And now under this S Corp election, only the 60,000 rather than the entire 160 is subject to the 15% self-employment tax. So by adding this S Corp tax election and funneling this reasonable salary, there's about $15,000 in self-employment tax that this business owner just wouldn't pay. Now, what you layer on top of this is what does it cost me to do all the extra administrative work of being an S Corp? And then you've got if you're still net in the green, then objectively it may be a good decision. So when LLC versus S Corp makes sense, so again, it's highly circumstantial. It's not a one-size-fits-all solution for your situation. There are some other things, particularly whether or not you earn income elsewhere, that can impact the savings potential. I'll just put it out there. It's a question we get asked often. Do you have to make a certain amount to make an S Corp election? No, the IRS will let you have a loss, any amount of income, $1 million, $25,000 of profit. You can operate under the S Corp election with any amount of income. It's just that if the savings are the motivator for making the election, your entire tax profile needs to be considered. So here on the list, single member LLC may be best if you are new to self-employment. So maybe you're testing a self-employed concept. Maybe there's some organic growth, but you haven't fully committed to being self-employed. So maybe your profit's a little bit lower. Maybe you want to keep things simple, like you don't want to have more robust bookkeeping or payroll, and you're fine with everything getting included on your personal tax return. If you earn income over a certain threshold, so if you're a corporate employee elsewhere, generally over 100,000, what's happening is you're approaching the Social Security limit. And so part of these self-employment taxes have to do with the way the IRS assesses Social Security and Medicare tax on all of your income sources. So when you're a high earner from a corporate wage, it can start to limit the savings potential if you were to elect S Corp under your own business. And so generally, if you're a single member LLC and you've also got additional income over 100,000, just know that it may be worth a conversation to explore an S Corp election, but your savings potential just may be less. And then lastly, there are places, I'm going to put New York City on blast, no hate. They just have a separate S Corp level tax. It's nearly 9%. That kind of negates the savings potential of the Social Security and Medicare tax. So sometimes you live in a state or a region where the S Corp election may not be as advantageous. So here on the right, the S Corp election may make sense if you've proven your self-employed concept. Maybe you finally feel confident enough to quit the corporate role and you're growing this business, you're earning profit, or your growth goals are increasing, and your W-2 earnings are non-existent or maybe less, or they're tapering off, which means the savings potential will start to exist. Maybe you're ready to formalize your business from a financial statement perspective. Now you'll have a more robust set of bookkeeping. Maybe you've got your eyes on some grants, investors, and you need to provide financial statements and standalone business tax returns. And maybe you're just ready to hand off a lot of the administrative work. And the S Corp election kind of bundles together a suite of services that you can outsource. In general, every situation is unique. So these can be guidelines, but highly encourage conversation to see what your situation may look like. And we're not going to go through line by line here, but key differences that matter, really what the main difference is between a single member LLC with or without an S Corp election is how the self-employment tax is assessed, how you pay yourself, so taking a formal salary via payroll versus not, paying self-employment tax on the entirety of your profit versus on a designated salary, tax reporting, so including everything on your personal return, filing one return each year versus triggering a separate business tax return. Now you've got a more complex tax profile. From a bookkeeping perspective, you may get away with an Excel spreadsheet as a single member LLC just to populate a profit and loss statement versus the S Corp, you now need to generate a balance sheet. And then the cost of maintenance in general, the S Corp election does trigger a lot more requirements, so it's a little bit more costly to operate. And we can get to the fun part, but first we will do a quick poll so that we can make these sessions more valuable. And then we're going to pivot over to the great questions. I'm so excited to dive into these. If you haven't already, copy and paste your question from the chat into the Q&A box, and then we can start tackling those here shortly. 18 questions. So we are going to do our best to get through these. I know we've only got a half hour. We can go over. The session is recorded, so if you've got a hop, we'll continue to answer the questions, and the recording will be sent out post-webinar. But please keep the questions coming, and we'll get through as many as we can. And a quick plug. If you scan this QR code, you will be taken to a landing page that's got the Catalent promo code. It will waive your first month of collective membership fees and our one-time onboarding fee. So if you already have an LLC set up and you don't need us to help you form one, it would essentially be a free sign up if collective is the right fit for you. Again, whether you're someone who wants to stay single member LLC or set up an LLC and elect S Corp status, we are built for both tax structures. And basically collective would bundle together, monthly bookkeeping, invoicing, payroll for the S Corp owners, and support with tax filing. All right. Well, I'm going to stop sharing my screen and pivot over to the Q&A. And again, this QR code is the same as was on the last screen. So if you need to schedule, you're welcome to do so. All right, we're going to get started. Andrea, I understand many of the S Corp benefits, but given the current revenue of my one-person business, I need all of it as my salary. Does an S Corp still make sense? So Andrea, what you're describing is that basically your profit, what's left over, is what you need to pay yourself in general. So when you elect S Corp status, your profit doesn't matter, but really what you want to consider is what does it cost me to run this S Corp with the payroll, the increased bookkeeping compliance, the separate business tax return, and still see, is your savings potential more than what it costs me to do the administrative work? Now, I'll clarify, the way you pay yourself out of an S Corp is a little bit more nuanced, but the cash flow, that profit that you need for your own bills, is still yours in entirety. It's just that the way you now receive it under an S Corp changes. As a one person business right now, you've got your profit and you just take all of it out to spend on whatever you need to spend it on. When you switch to an S Corp, now that total profit is split into two buckets. One bucket is going to be this formal salary that runs through the payroll process. That's kind of just like direct deposit, kind of in the background. And then the rest of your profit, you can take as an owner distribution, just like you do now. And that can supplement the salary. So in general, your total cash flow can still be the same. You just receive it in two parts. One part's this, formality of a salary that needs to run through an S corp, and then the remaining profit can be taken as an owner distribution. Now, generally, for an S corp to make sense, from a savings perspective, 60,000 of profit is where we see people have a savings potential that's more than the cost of collective. And all I mean by that is, what does it cost me to do the extra administrative work? Cleo, at what point is an LLC's in I'm sorry, Cleo, at what point in an LLC's growth does it make sense financially to make an S corp tax election? So Cleo, let's assume there's no other income sources. Generally, what I would ask people is, do you have income on a W-2 elsewhere and how much? If that's not part of the equation, 60,000, 60 to 80,000 of profit is a good threshold to have a conversation to see if your savings potential is going to be more than the cost to do the extra work. For any situation, an LLC is most likely going to be the starting point. So if you're an LLC right now and S corp doesn't make sense for this tax year, it's not to say it might not make sense for the following. But Cleo, if you don't have any other sources of salaried income, like a wage elsewhere, and if your profit's between 60 and 80,000, I would say it's a good time to have a conversation. Stephanie, I just saw your question in the chat. I'm going to piggyback off it because I think it's related. Social Security and Medicare tax, or Stephanie's asking, does it matter if you have a spouse that is on W-2 and doing joint filing? No, the IRS assesses Social Security and Medicare tax per individual. And that's what we're really looking to see, is how much Social Security and Medicare tax can you save on, and it's assessed individually. So your partner's W-2 income does not matter, even if you file jointly. JL's asking, approximately how much is self-employment tax? I realize it may differ state to state. So self-employment tax is generally referring to a federal level taxes made up of Social Security tax. So this is the bulk of it. This is 12% of the total 15%. Social Security tax is assessed up to a certain wage base that the IRS assesses every year. So I think for this year, or 2025, it was 176,200. And so if you made self-employed income up to that amount, then the IRS would assess 12% Social Security tax on that. Medicare tax is a much smaller portion. It's 2.9% of the total 15, and that's generally assessed on your total profit. So self-employment tax is a federal tax made up of two other taxes, Social Security and Medicare. At the state level taxes do vary. I don't know that states have their own specific self-employment tax, but they may have, fees or business profit taxes related to the LLC or S Corp. For 2025, my business operated at a loss, meaning I invested more into that than I realized in revenue. Would an S Corp help or hurt in that situation, or does it not make a difference? So the IRS does not prevent you from operating as an S Corp with a loss. But if you have a loss, that loss can offset other income that you have, other ordinary income that you have. In that instance, there really isn't a self-employment savings potential because you're at a loss. There's no taxable profit. So it may not make sense to go full S Corp election for this particular year. And depending how big that loss is, it may offset future income. So the S Corp election may not make sense for this year or next, but depending on how large that loss is. JL, I'm glad I answered your question. Sweet. How do the taxes differ when you're moving from LLC to C Corp? So a C Corp is an alternate structure that pays a standalone corporate level tax. So an S Corp election is a tax election made with the IRS to essentially retain pass-through taxation, where the business itself does not pay corporate level tax, but the income passes through to the owners, and then the owners pay tax at their regular personal income tax level. A C Corp is a structure more commonly used by businesses that want to IPO. That structure allows you to have multiple classes of stock, unlimited investors, foreign investors, and it pays its own corporate level federal income tax. And so, really, the S Corp tax status, that part of the tax code was created to incentivize small business owners because pass through taxation has generally been more advantageous versus a corporate level tax that kind of triggers this true double taxation structure. For a C Corp, it pays 21% federal income tax and then, whatever the states assess. And then you pay tax again when you take a distribution as an owner. So C Corp is the true double taxation structure, whereas a single member LLC that elects S Corp retains this pass-through taxation structure. There are more questions, so keep them coming. We're going to hang on as long as we can, and we'll make sure this whole session is recorded. But thank you for all the questions. Roger's asking, can you also go over the differences between the retirement contributions? This is a meaty subject, Roger, but let's keep it high level. Generally, we've seen folks who are self-employed in either tax status optimize between two main retirement options. One is going to be a SEP IRA, so you may be familiar with this, and the other is a solo 401k. The reason we see most people choose these structures is because they have higher contribution limits. And since they're pre-tax retirement plan structures, you get a deduction for the contribution in the year you contribute, and then you pay the tax later upon retirement. So again, keeping it as high level as we can, Roger, we may have some resources that are more detailed, but at a high level, both of these retirement plan contributions offer higher contribution limits. There's also some extended deadlines to contribute. So contrary to like a traditional IRA or a Roth IRA, I think the deadlines for some of those were at the end of the calendar year. SEP IRA or solo 401k, you have until you file that tax return to make a contribution. That's effective for the prior tax year, so you can still get a deduction. So high level, solo 401k or SEP IRA for higher contribution limits, meaning they can equate to a potentially higher deduction. At what income level does it make sense to go with S Corp? So there is no rule, again, with the IRS, but if you've got 60 to 80,000 of profit, it's a great time to have a conversation about switching your tax status to S Corp. JL is asking, so if there are distributions that aren't taxed at the corp level, they still get taxed as income at the individual level? Yes. So you've got this whole pool of business profit, right? And your goal is always to lower your profit as much as possible because that means you're claiming all the eligible deductions you can. And your profit is what you're ultimately taxed on. So under the S Corp, you always pay income tax on the entirety of your profit. But again, the way it's ultimately reported on your personal tax return is now split into two buckets. You'll get a W-2 for your reasonable salary that comes out of the S Corp, and you'll include that on your personal return. And then you'll separately get a form called a K-1, this comes out of the S Corp, that shows the remaining business profit, and that is subject to income tax whether you distributed it to yourself or not, right? Because it's profit that the business earned regardless. So it will always be subject to income tax. So between the W-2 and your K-1, you now have your total business profit that you earned out of the S Corp, and it gets reported on your personal tax return, and that's how you pay the income tax on it. Volker's asking, what are the rules around determining one's fair wage? Otherwise, I just pay myself $1. Yes, why wouldn't you if that's how you save money? The IRS guidance on reasonable salary is very vague. Some might say unhelpful. The tax code literally says it needs to be quote unquote reasonable. But we do learn from case studies. So we've found out that the IRS is factoring in, your region, your seniority in a particular role, comparable salaries based on where you live, whether or not you spend 40 hours a week versus 20 hours a week on this role. You also wear different hats. So, what hat do you wear for the actual consulting work versus the hat you wear for the administrative side of running your business? There are companies that do studies that can help you arrive at a salary. Here's the risk in paying yourself too low, though. If you pay yourself a dollar or any other amount that might be low compared to your total business activity, then the IRS can view that as tax avoidance, right? Because the salary is your means to pay into Social Security and Medicare tax. And so if you're skipping the reasonable salary in entirety, or you're paying yourself a dollar, $10, then it looks like you're not paying into those systems. So the risk is that it could get flagged, and then the IRS can determine a salary for you and then assess the Social Security and Medicare plus penalties and interest. So that's the risk. What we tell our members is ultimately it's your decision to choose. Collective will help establish a range for you. And you as the taxpayer can ultimately determine where on the land. The risk is that if the IRS doesn't like it, they can reassess it for you. Cleo, is an S Corp election advisable in the state of California? We have a lot of members in California. California does not have a high S Corp level fee in the same way that New York City does. So it's very normal in California. It's a 1.5% tax, S Corp tax on the business profit at the California level. So yeah, I would say if you're in California, the S Corp is generally favorable. John, can you change back to a single member LLC if desired after declaring and filing as an S Corp? So the IRS does let you revoke your S Corp election, but it prevents you from re-electing on that same entity for 5 years. So they don't want it to be treated as a this year I'm S Corp, this year I'm not. Really, you want to make the decision when you feel like it's a long-term path or growth plan for your business. But there is a door to revoke it. When you revoke an S Corp election, you default to a C Corp. So there's actually one more step to get back to single member LLC status. So it's possible. You would still be subject to the S Corp compliance. So closing out the S Corp, finalizing a final S Corp return, closing out the books, making sure that you file that additional step so that you're not taxed as a C Corp. And then you can go back to the single member LLC treatment. But it will close the door on S Corp status for a period of time. What if you don't have W-2 income, but have substantial IRAs, retirement, the RMDs that you need to take? So the S Corp savings potential has to do with how much you limit Social Security and Medicare tax. Most often, additional W-2 income is subject to those taxes, Social Security and Medicare tax. So that's really the main factor that we're including to see, is there a savings potential? Off the top of my head, and I'm not a financial advisor, I'm not sure if RMDs are subject to Social Security and Medicare tax. If they are, then that would probably also be something that you'd want to consider, right? Because you're already paying into those systems, which means it could limit the savings potential. So I'm not sure, but if those RMDs, minimum distributions, are subject to Social Security and Medicare tax, it could impact the savings potential of making an S Corp election. Why is the other W-2 income less than 100K relevant? So this is an arbitrary threshold that we've just established as a talking point in talking to so many solopreneurs. When you have additional income elsewhere from a wage, you're paying into the Social Security and Medicare buckets, which means it can start to limit the savings potential specifically for Social Security tax if you were to elect S Corp for your self-employment activity. So this threshold is not like a firm line in the sand with the IRS or anything. It's just where we see that savings potential start to get limited. That's not to say you can't have a high earning role and an S Corp. Maybe you want to unlock the ability to do max out retirement contributions through your S Corp, and paying yourself a wage regardless of Social Security savings is advantageous for you. So really, if you're looking for a savings potential, these thresholds with a W-2 income are just meant to say, hey, if this is you, your savings potential may be limited. If you're married and your spouse has a high earning W-2 over 100K, your LLC is less than 60,000 of business profit, does that change whether you would do an S Corp election? So this is kind of similar to a question that was asked earlier. Your partner's income does not matter for determining whether or not an S Corp election makes sense for your business. And again, that's because the IRS assesses the Social Security tax per individual. So the spouse's income doesn't necessarily matter. Separately, if your LLC is not making a lot of profit, again, it's not a barrier for electing S Corp. It just may mean that you might not save as much as someone earning a higher profit. So their wage does not matter, but profit in the business and its growth potential may impact the savings potential. And I know we're at time. This was scheduled for 30 minutes, but we've got great questions. There's 24 questions remaining. So feel free to hang on or drop off if you've got to. Either way, we're going to post the recording for you later. Anonymous attendee, yes, this material will be available. Herbert, as a solopreneur currently in Mexico, 100% of your time, I want to do AI consulting with US clients. Which structure would you recommend? Tax perspective, Delaware versus Wyoming. S Corp seems to not be allowed if you're not residing in US, but LLC or C Corp better. Herbert, I'm gonna level with you. This is a bit of a more nuanced tax profile. If you're so the barrier for electing S Corp has more to do with you being considered a resident alien or US citizen. So you still may be able to elect S Corp status. In terms of where to structure, it may depend on whether or not you still have a tax home in the United States. Herbert, I'm going to level with you. We may take this one offline because it may be out of my wheelhouse, but generally Delaware, Wyoming, they're attractive because they seem to have more privacy rights. If you don't have a tax home in the United States still, then I'd say it's worth exploring another state like Delaware or Wyoming to set your legal foundation. If you do still have a home state, like maybe you still file in Texas, I would say the LLC originating there is probably more advantageous, but may be able to get more information for you. For a single member LLC consulting S Corp, where revenue is basically my labor, what's the most defensible way to set reasonable compensation? Specifically, what market data sources do you accept? What salary range would you consider supportable? And what documentation would you want on file for the IRS if it was ever questioned? So here at Collective, we help you establish a range, and ultimately you can decide on that range. As the taxpayer, you're still ultimately responsible in the eyes of the IRS for the position you take. What I would do if it were me choosing my reasonable salaries, I would have a file that showed comparable salaries in my region based on my seniority level, the same type of business. I would make notes if I'm doing this part-time and not full-time, and I would just document how I arrived at the salary. Ultimately, you can decide when you're choosing the salary initially. There's a lot of flexibility in between. So if something changes in your business and you skip a payroll, or you sign on a big new client and you need to do like an off-cycle bonus, there's a lot of flexibility throughout the year to make adjustments to your wage. But similar to receipts, you just want to be able to defend your position if the IRS asks. So I would have a one-pager of comparable salaries. Maybe if you want to do a little bit more math, and I've seen people blend their roles from the consultant hat to the manager hat. It's really up to you to see how much detail you want to put together. But I would have a one-pager with comparable salaries in my region. And what tax year is it? Year one? How do I plan to make adjustments in year two? And just keep that in your file. Collective doesn't necessarily require that our members put that documentation anywhere, but we will help you establish a range within your dashboard. Cleo, how does Collective address the administrative elements of managing an S Corp? So Cleo, if you were to join Collective today with a single member LLC, your service would essentially start with us doing the paperwork to elect S Corp status. So we would file that with the IRS on your behalf. And then from there, we pivot to the operating side. So we connect your business bank accounts and credits to our in-house accounting software. And then our team is doing monthly categorizing and reconciliation. So you've got clean financial statements every month end. So your books are maintained throughout the year. Again, we partner with a payroll company called Gusto. Again, it's all embedded in your collective dashboard. It's lumped into the membership fee. We do the employer registration. We help you choose the salary range, pick your salary cadence. And then the whole payroll experience is embedded into the collective dashboard so you can, maintain that piece of compliance within the collective environment. We also have invoicing that's available for our members to use. It's customizable. It's integrated into the platform. You can put your logos, your business name. You can set it up on recurring. So, instead of going to a separate app, the invoicing component is also part of the collective environment. And then Collective will help with quarterly estimated tax payments. So if you need reminders, we will proactively give recommended payment amounts that you can use as a baseline for your quarterly estimates. And then every December, we start the process of closing out the books. So making sure your out-of-pocket expenses are captured onto your books, home office deduction, if you have mileage, if you drive. We start the process of closing out the books so we can head into tax season and file timely, or if you need to file an extension, we can help you there. And then we ultimately help with the filing process. So really the idea behind Collective is there's all these services that you need to maintain your business, bookkeeping, maybe payroll, anything. And they've historically been disjointed. And now with Collective, it's under, one app, one login, and one subscription fee. John is asking, you mentioned having additional W-2 income, and that can be a reason not to elect as an S Corp. What's the reason for this? So if your motivator is to look for a savings potential, savings opportunity, and you have a lot of W-2 earnings assigned to you, that W-2 income is also being subject to Social Security and Medicare tax, the same taxes that we're trying to limit under the S Corp. So when you have additional W-2 earnings, it can impact the savings potential of electing an S Corp. And if that's not the main motivator for you, it's no harm, no foul. There's no reason for you to not elect S Corp if you just wanted to for unlocking higher contribution limit, retirement contribution limits, or you just want the financial statements, or it's ready for your business to not be grouped into your personal tax return. So again, this is not a rule with the IRS. It's just that if you're looking for savings opportunity, it may not exist if you got a high earning salary on the side. Let's see. What is the cost benefit of hiring a third party to handle payroll, recommended providers, collective versus ADP, and the cost of service? So companies like ADP, even Gusto, who we partner with for payroll, are standalone payroll service providers. Paychex is also a popular one, QuickBooks Payroll. They're generally standalone payroll services, and it's isolated to the payroll setup, payroll tax returns, which is hugely valuable, but you're paying for maybe a disconnected service or disconnected experience. With Collective, if it's a good fit to support your business and your structure, all of this payroll, all the moving parts of payroll are embedded into the Collective environment. So you're not having to log into a separate app or pay a separate fee. But ADP, Paychex, Gusto, QuickBooks, payroll, they all do the same thing for processing payroll. They generate payroll tax returns. They generate pay stubs. You can pay any number of employees. It's just that if you join Collective, it's handled via Gusto, part of your membership, and it's embedded into the platform. So if you were to explore something like ADP, you would probably separately have a solution for bookkeeping and you'd separately have a solution for tax filing, whereas at Collective, it's all grouped together. Thank you to the 28 people still hanging on. This is a really great group for being nearly 15 minutes over. We'll just keep going. Let's see, the next question. In the S Corp structure, I understand the owner wages are subject to both self-employment and federal income tax. Can you please clarify what taxes the owner distribution is subject to explicitly? So owner distribution is your business profit. And your business profit can have income that's been distributed or not. So that remaining profit is subject to your federal and state income tax. Only the wage is subject to income tax and self-employment. So the owner distribution is part of remaining business profit, and that is subject to income tax. If filing a tax return for 2025 in the year 2026, should the S Corp have been elected in 2025, or does it have to be done in 2026 before April 15th? So the IRS has a couple deadlines to make the S Corp election and it be considered timely. The first thing that needs to be true if you're exploring an S Corp election for a time that's passed is a legal entity has to have been in place. So, Chris, for your question, to unlock the ability to have a 2025 S Corp election, an LLC would have had to be in place at some point in 2025. Then, for a 2025 S Corp election, technically, you would have had to make the election by March 15th of last year. But then if you file it after, the IRS has what's called a late relief process. So the TLDR is if you had an LLC that existed last year, you can still technically do a late S Corp election for the 2025 tax year. The way I've seen it done most often is you prepare and file that S Corp tax return. It's due March 15th. And you need to make sure you've got books, the reasonable salary, whether you ran it or not, could be a risk for 2025. You'd have to find a preparer. There may be payroll tax returns that need to be added, which are due January 31st for the 2025 tax year. And then you would just attach that late S Corp election form to the S Corp tax return that you would file on March 15th if you were going to tackle that. So technically, it's possible. It depends on whether or not you had a legal structure in place first. At Collective right now, it's a lot of catch-up work to meet that compliance requirement in March 16th. So we're doing everything effective 2026. This is a question for the group from Robert. Has anyone gone from S Corp to an LLC after being in a business for a while? It is allowable. If Robert, if you're looking for some commentary on the experience, I would welcome anyone to chime in with the chat. But the IRS does allow you to revoke the S Corp election. You default to a C Corp after that. So you have to file one more form to go back to the single member LLC tax treatment. They prevent you from reelecting for 5 years after. So, they don't want you to flip flop between tax statuses. Roger, would the owner distribution amount be subject to capital gains tax or regular income tax rate? Roger, you're getting into complicated tax profile territory. Generally, if you're not taking distributions in excess of the amount you've earned over the years of being an S Corp, then it doesn't necessarily trigger any capital gains impact. Now, there's this concept that we're not going to get into in too much detail, but it's called S Corp basis. And it's basically a record of how much money you've put in and how much money your business has earned over the years. If you're profitable, very generally, your basis is generally positive, which means even when you take distributions out, it's not going to trigger any other taxable events. But if you've had losses year over year and you've continued to take distributions, this can put basis into a negative amount. And when basis is negative and you take money out via distributions, it can trigger some capital gains. And so that's something that we very lightweight cover in your bookkeeping process at Collective. There's a basis schedule that gets reported with that S Corp tax return to make sure you're not nearing that negative territory. But yeah, there is a potential for capital gains impact if your business is running at a loss and you're still taking distributions. And again, this is like the oversimplified version of S Corp tax basis. What are the collective costs? Seems like I can't take the poll without the complete info. Sorry about the poll, but Collective is a monthly membership, $349 month to month if you are an S Corp member, $199 a month if you are someone who wants to stay at the single member LLC level. If you need us to help you set up your LLC, we just pass through that cost with nothing added to it. We just pass through whatever the state assesses. And then we typically have a one-time onboarding fee, $199 with Catalent, that is waived. If you're an independent consultant with only consulting fees as revenue and, of course, operating expenses involved, why is payroll tracking difficult or expensive? So if you're an independent consultant and you elect the S Corp status, the reasonable salary is actually a requirement of that S Corp election. So it's a flat out a compliance need when you make the S Corp election and you're going to be taking money out of the business. So what makes payroll challenging, and this is different from just getting like paying a contractor, you just cut a check and it's clean and it's simple. And that person reports it as self-employment income on their side. But when you're your own employee or you have someone else who's a formal employee, you have payroll withholdings. So Social Security and Medicare tax is taken out of the pay stub. You also have like maybe some state level disability. You have your federal income tax withholdings. And so a payroll processor like Gusto ADP automates and remits all of those taxes to the right authorities through every payroll run. Payroll is also complicated because you have quarterly federal and state payroll tax returns. So there are, quarterly and annual payroll filing requirements that are also pre-populated and automated for you when you use a payroll software. I've seen payroll done manually. I signed up my dad at Collective because he was running through his own S Corp and I didn't know how to do payroll. So payroll manually is a very labor intensive, confusing, frustrating process. So that's why a software, whether it's Gusto or ADP or Paychex, makes it a lot easier. Jackie, what's the difference between Catalent and Collective? Well, Catalent is a group that's bringing together all of you consultants, and Collective is a service that provides the financial side of being a consultant. So we are in partnership together really to see if we can help serve this group of independent consultants with the administrative side of their business. Can I do the S Corp election for my 2025 taxes? Again, if you had an LLC in place all of last year, technically the IRS has an open door for you to make the S Corp election for that year. Generally, there's a lot of catch up work. So if you didn't have the foundation to operate as an S Corp, meaning no payroll, no bookkeeping, the deadline to file a 2025 S Corp tax return is coming up on March 15th. So there's a lot of work. And with that work, it can be costly to get to a place where you have a 2025 S Corp. Depending on how much you made, maybe you want to see the savings potential to see, is it worth the administrative lift, finding a CPA, finding someone to do books to tackle it for 2025. Right now, for our members and the people we talk to, we're doing 2026 elections. Do you pay Social Security tax twice, one under self-employment and other in your payroll? No. So this is a great question. Self-employment tax is made up of Social Security and Medicare tax. Payroll tax is just another label for paying the same bucket of taxes. So payroll taxes also refer to Social Security and Medicare. It's just referring to it when it's under that formal like payroll process. So it's the same bucket of taxes. You don't double pay it. It's just, are you paying it through a payroll process or is it called self-employment tax on your personal tax return? Ryan, does Collective allow managing multiple businesses? For example, I have a consulting business under one LLC and a service business under a different LLC. Every separate business would be its own Collective membership. And you're welcome to do that. We have a lot of members who have two businesses and then we're helping them with both. So if that's you, we would still advise a consultation call. We would see, is your candidate or which one of your businesses is a better candidate for S Corp or LLC tier. But they would each be their own membership. If your income varies year by year as a consultant and you had elected to be an S Corp, is there payroll processing cost the only negative item? Also, roughly how much is the payroll processing cost? So if you've elected S Corp and your income varies, is running payroll like the only downside of being an S Corp, and how much does payroll generally cost? Payroll, Gusto, the subscription, and us doing the setup is included in the Collective membership. So $349 a month if you're an S Corp owner. I think if you were to standalone scope out Gusto, it might be like $40 a month plus $6 per employee. Some payroll companies will charge based on the amount of payroll runs or the amount of employees. So the cost is included in the Collective membership if you're a business of one and you're the only person on the S Corp election. Payroll, though, objectively, if you're the S Corp owner, I would say it's the biggest pain point because it's the new thing that you have to pay for and it's pretty complicated to DIY. Cleo, is it possible to have multiple shareholders as an LLC with an S Corp election? Absolutely. So, collective is very isolated to single owned businesses. That's just who we're built to serve. But in general, if you've got a partnership, S Corps can have up to 100 shareholders. So, if you need support for a multi owned business, we would suggest, a more traditional firm, most likely, but the tax code does allow for that. Joelle, yes, the recording will be shared. Brian's asking, once you elect S Corp election for a given year, can you deselect it in future years or would you have to create a new LLC? So you can formally revoke the S Corp election, but the IRS prevents you from re-electing on that same business for 5 years. They don't want you to treat it as a back and forth tax treatment. So really the decision to step into S Corp status should probably be based on your growth goals, your commitment to self-employment. If it's going to be more than 2 years, is generally how we look at this because you're triggering annual filing requirements. So the IRS, and from an administrative perspective, doesn't want you to go back and forth with different processes and compliance pieces. So you technically can revoke it. You're prevented from reelecting for 5 years. And if you wanted to do it again for a new business, you can elect on a new LLC. How do I defensively lower my reasonable salary since I'm a one-man shop? If you're already operating under an S Corp, I've seen people skip payroll runs, not necessarily lower the whole wage, but maybe skip payroll runs if your activity has changed. Again, the same way you arrive at a salary, maybe it's a new tax year. Think of it as maybe this is your annual review. And even though it's just you, maybe it's silly. Maybe you're documenting how your business model is changing. Maybe you're documenting how your involvement's changing. Maybe you've hired more contractors or another employee to take on some of the work. So just document it. I would say if you're taking a lot of money out of the business via distributions, but you're also lowering the salary, that could be a flag to the IRS, right? Because now there's an uneven distribution or a changing distribution of how much you're paying on self-employment tax. Generally, lowering the salary, I would say, may not be a great idea, but we have seen people skip payrolls. JL, did I hear this correctly? I think you were saying that an S Corp allows you to make more contributions to 401k retirement, so I could move all my profits into the 401k or retirement. Generally, a solo 401k, just the nature of how it exists, allows for two different parties to contribute. So in a 401k structure, you have employee contributions. So under an S Corp, JL, you would be the only owner of your S Corp, owner employee of your S Corp. You as the employee hat can contribute. Last year, the limit was $23,500. That's a flat out employee contribution that you can make to retirement, and that reduces your taxable wage. Then the S Corp can make a separate employer contribution up to I think it's 25% of whatever your salary is. And that becomes a deduction for the business. And so between the two, you may be able to contribute higher just because you get to contribute from two hats. And the advantage there is both of those contributions ultimately lower your taxable wage. The SEP IRA also allows for a similar style with a higher contribution limit that becomes an adjustment to your total taxable income. If one is taking an RMD and work as an independent consultant, can one still put money into a SEP 401k? I do apologize because I am not an expert in a lot of the retirement financial planning side. So this question related to RMDs, can you still put money into a SEP 401k? I don't know the answer to that. Let me see if I can find out if there's any, barriers to continuing to contribute to retirement while also taking RMDs. I'm not sure. What percentage of firm profit does Collective typically recommend as a defensible salary for an independent Catalent consultant currently operating as a sole proprietor? So generally, your salary should not solely be determined based on your profit, right? That's not a rule by the IRS. Maybe you've seen the 60-40 rule. It's a general rule of thumb, but it's not a formula or an allocation that's backed by the IRS. That said, it can be a great starting point for establishing your range. most of collective members end up choosing a salary that could be between 35 and 65% of their profit. And that's just from the data perspective. That's not to say they didn't also factor in, the comparable salaries. Maybe some of them did a study. Maybe some of them were comfortable just relying on a percentage of their profit. So ultimately, it's on the taxpayer to determine what their comfort level is. We provide a range that's generally based on a percentage of your profit, but again, that's intended to be a starting point, and then you as a business owner can, do some further research on comparable salaries from there. How late in the year can you make an S Corp election? So the IRS wants you to make an election within 2.5 months of your desired effective date. So generally, you want like a clean January 1st effective date. That means all of your business activity is cleanly reported on one tax return. So if you wanted a January 1st S Corp effective date, you would make the election by March 16th of this year. That's the 2.5 month window for that 1/1 effective date. If you miss that deadline, that's the deadline to make it timely, which means there's a little bit less scrutiny. The tax form's a little bit simpler to make the election. The IRS does allow late elections, but again, it does trigger, catch-up work. You rebuild your books for a longer period of time. And the S Corp election form is slightly more complicated. But generally, we advise people to make the election timely if, they're having conversations early in the year. March 16th is the deadline to do so for 2026. If we have an LLC and a spouse is one of the executives and as an active team member, if you're an S Corp, can you give distributions to yourself and your spouse and reduce tax liability? So again, distributions out of an S Corp, whether they're to one owner or multiple, distributions are still taxable profit. So those owners, if it's you and your spouse, maybe it's 50-50, you would each get a K-1 that shows the remaining profit. And that remaining profit will include whether all the profit, whether you distributed it or not. So you will always pay income tax. It may help alleviate some of the self-employment tax burden, but you can have your spouse on there. Maybe one or both of you takes a wage. There could be a way to arrange that where it lowers self-employment tax. But generally, all the profit is going to still be subject to income tax. John Williams, thank you for the shout out. I appreciate it. These are great questions. So we can't do these sessions without participation. 17 of you still on the call. Thank you. So does Collective also do tax returns? How much do you charge? So for our S Corp members, we do the S Corp return. That's included in the cost of the membership. And then you can add on the individual filing if you don't have a solution for it. Some of our members like to self-prepare. Some of our members have a family CPA that they've used for their personal filing. So they, do their business return with Collective because it's included in the cost. And then they'll, self-prepare the individual side later. So $349 month to month includes the cost of the business tax return. For our LLC tier members, it includes the cost of your individual filing because that business activity is on the Schedule C. In either case, like for S Corp members, you can add on individual filing. That's an added fee. It ranges from, I think, $199 to $499, depending on complexity. That's an option for S Corp members. Generally, there is a tax component that's included in either membership tier. Can I just engage Collective for bookkeeping and how much would the charges be? So right now we don't have standalone services. Everything is intended to be a bundle. It's a suite of services to make all the compliance in one place and easy. So right now, if you want standalone bookkeeping, you might have to source the solution elsewhere. Rajat, if you want to talk about whether or not the suite of services is an advantage to you, definitely open to taking a call. Tim, you arrived late. No worries. There will be a recording of this session sent to you after via email. And last one, is there any way for me to contribute to self-employed 401k after December 31st? You're a sole proprietor. Yes. Generally, sole proprietors, this means your profiles on your personal tax return. I see people optimize the SEP IRA. And I believe you have up until you file your personal tax return, so April 15th, to make a contribution there. So look into it. I would say a SEP IRA will unlock a higher contribution limit for you, and that's probably where you might see a higher tax advantage, but there is time. And we got through 44 questions, and we went the full hour. So thank you so much for this, the time, sharing your time. Great questions. Again, QR code here on the screen. Feel free to scan it and book time with one of our advisors. Getting started with Collective via Catalent will be free for you, and then normal monthly fees will resume. Please add me on LinkedIn if you didn't already. I'm going to go through this chat and connect with any of you who invited me to do so. Thank you again for the time, and we will talk to you soon. Bye.